Mr. Allison, you just announced your new financial and strategic aims for the period 23-27. What will be your main priorities for this time frame?
Yes, good morning. The priorities are actually building on what we told the market 2 years ago. And one of the first things we do this morning is show how we're achieving the aggressive targets we set out back in 2020. Now we're going to build on those targets. We've set in place a lot of different initiatives within the company to further grow our market share, to further build new products and adjacencies in the semiconductor area, but also to grow our service business and our advanced industrial business. And VAT is at the center of most of the global megatrends that are impacting our lives today: digitalization, renewable energy, healthcare, aging population. And we see that creating high growth in all our markets. And today, we will show a new plan to 2027 that shows almost a doubling of VAT to around 2 billion by 2027. So a very exciting outlook for the company. We'll have significant expansions in Hague, in Switzerland, and also in Malaysia to ensure that we have the infrastructure to deliver on that 2 billion opportunity.
Thank you. The majority of the economists are forecasting a significant cooling of the global economy next year. To what extent will this affect your business?
Yeah, semiconductors, which is our key market, is a cyclical business. I've been in the industry nearly 35 years or longer. I've gone through 10 cycles. Every time we come out of a cycle stronger than we went into the cycle. So yes, we are approaching a semiconductor down cycle. We're already seeing it happen. We expect 2023 to be a down year. It's well publicized. Our key customers are saying that. The key thing is VAT is ready. We have a very flexible operating model, and we'll come out stronger. And in the last downturn, we invested heavily through the cycle. And that enabled us to come out with high growth and to harness the opportunities that were there for the company. So our main focus is to weather the storm and to come out stronger.
To what extent are cost savings and job cuts an issue for you?
So one of the strengths of VAT is we have what's called a flexible operating model. That allows us to scale our business quite efficiently. We do operate with around 20 to 25% temporary staff because we know we're going to see high peaks and then troughs. So, of course, we will be adjusting some of our temporary workers as we go through this cycle. That's why we have temporary workers. My main goal is to keep the infrastructure in place, to keep our permanent teams in place so that we can continue to invest in new products and be ready for the even bigger wave that's going to come in 2024 and beyond.
How do you see the semiconductor market developing in the short and medium term?
Yeah, it's an exciting market. It's approaching $1 trillion by the end of this decade, which is coming quick. Semiconductors are now becoming the #1 traded commodity on the planet. It's overtaken oil in terms of significance, and that's going to continue to grow. Semiconductors are everywhere. Even traditional markets like automotive, chip content in a car is growing at 11% growth per year. So this is propelling our industry, and the path to 1 trillion is almost guaranteed. And that's why we're so confident at VAT that we're going to continue seeing very significant growth in our business.
Do we have already a little more clarity on the impact of the US sanction against China and how this will affect VAT's business?
Yeah, this is one of the major political challenges we have, and probably one of the biggest impacting our industry. I think the key point is that both countries desperately need semiconductors. Taiwan is also becoming a pawn in this political crisis. But if there was any major conflict with Taiwan, it basically shut down global trade. I think the stakes are too high on both sides to enter into that type of conflict. So we're hopeful that we can avoid that. I think the recent dialogue between the two heads of state has been a positive thing. But the US are pretty resilient on their desire to hold on to IP and to protect that IP being copied in the East. And I think we'll continue to see sanctions. VAT is pretty well protected. We have strong positions in both China and the US. We mostly sell our standard products into China, and I think there's a good chance that we will avoid any key sanctions. So we're still optimistic that that will work its way out over the next couple of years.